The 2025 Canadian housing market is going to be interesting. In this video, we're going to look forward ahead, and this is my outlook for 2025. I'm going to be discussing the 9 things that I will be watching in today's housing market and how they could impact you as a potential buyer or seller. This is not a prediction video. This is simply just things that I am watching. If you want to watch my 2025 real estate predictions for the city of Toronto, you can check it out in the description. Welcome back to the channel. My name is Tom Storey. I'm a real estate agent here in the city of Toronto. And if you're new to this channel, make sure to like this video, get subscribed for upcoming videos. You can also book a call with myself or my team in the first link in the description. Let's get right to it. There's 9 things I will be closely watching this year to figure out how I'm going to advise my clients, how I'm going to advise the personal decisions that I make in my real estate journey. Let's get started. Number 1. Interest rates. Of course, interest rates have to be number 1. When interest rates change, it changes what people's purchasing power is going to be. It will fluctuate what Canadians' monthly payment is going to be. It's going to increase the demand or decrease the demand across the entire housing market. When we talk about interest rates, we have to break it up into 2 categories. You have the variable rate. The variable rate is impacted directly by when you hear Bank of Canada changes their rate. So if Bank of Canada continues to decrease the overnight rate in 2025, the variable rates will continue to go down. The fixed rate, the 5-year fixed rate, is the most popular option for a lot of Canadians. That is tied to the 5-year government bond yield. So these are totally different things that are connected but not connected at the same time. Interest rates going down could mean that the overall economy is not great. So that's one of those things, right? It's kind of like careful what you wish for. If you want lower rates, well, it means that maybe more people are going to be unemployed. Interest rates for me are probably the number 2 most important thing I'll be watching in 2025. The second thing I'll be watching is the election. It's happening, folks. We're going to have an election here in Canada in 2025 at some point, likely between March and November. We're going to have a federal election, and our friends in America just went through the same thing at the end of last year. And I know a lot of real estate agents in the States, and I want to bring up this point to you, is that, okay, the results of the election, whatever they end up being, I think a lot of people feel very strongly that they want to change here in Canada. But the results that we see, yes, the new party in power could make changes that could directly impact the housing market, but it's more just the uncertainty leading up to the election. So as I mentioned before, I got a lot of friends in the States, and what they noticed is as they were leading up to the election, a lot of buyers and sellers were actually waiting before they made housing decisions because they wanted to see the outcome of that election before they purchased or sold in a specific area. Elections create some level of uncertainty. And when there is any level of uncertainty, like we just saw over the last few years with interest rates, sometimes people just have that wait and see approach. The third factor I'll be watching is new housing starts in Canada and what they actually are. We hear it all the time. We need to build more housing, but not just expensive condos that investors buy. We need to build affordable housing that people can actually afford and get into and grow a family here and feel good about it, right? When we talk about housing starts, we have to figure out what is actually being built. That's what I'm specifically going to be watching. Yes, the number of housing starts will be a number that's reported, and likely it's not going to be as high as it probably should be, but what they're building is going to be important to me. Are they building actual houses that family want to buy? Are they building condos that investors are buying? Or are they building purpose-built renters that people can rent, but these units will never be available for sale? That may be good for rental prices in the future, but if you want to get into home ownership, it might get you stuck into that segment of the market for longer than you want it. And that takes me to the number 4 thing I'll be watching, which is rental prices across Canada. Rentals.ca does a wonderful job with their monthly rental reports. You can see exactly what's going on in your specific market. It seemed like a lot of the quote unquote cheaper markets were going up in rent, and the more expensive markets were going down in rent. That's a trend that I actually think will continue into 2025. I think Toronto, Vancouver, you're going to see rental prices continue to go down. In other markets that were cheaper previously, you may see them slowly ticking up again. For the first time in a long time, if you're a renter here in Canada and you signed that rental agreement 24 months ago or less, it may be time to start looking around and see what else is available. Because for a long time, people weren't moving. They were staying in their rentals, potentially because they were under rent control, and be way more expensive to move to a similar property. For the first time in a long time, it might actually be cheaper. So just something to consider. The 5th factor is the mortgage renewals in 2025. This mortgage renewal cliff we've continued to hear about that hasn't actually impacted the market like a lot of people thought it was going to. So a few things to consider with the mortgage renewals. Of course, if you had a 2% rate and you're going to a 4.5% rate, your monthly payments are going to be higher. Now, a lot of people that look at this and go like, this is going to be the end of things. There's tons, thousands and thousands of Canadians that are going to have to renew their mortgage in 2025 at a much higher rate. I just want you to consider this. When they got that mortgage rate several years ago, they would have had to be stress tested at least at 5.25%, even if they got a rate much lower than that. So the new rate they're getting is still lower than the rate that they would have been stress tested at 5 years ago when they initially got that mortgage. Most banks I've had experiences with, if you were 5 years into a mortgage, meaning you signed a 25-year amortization, you got 20 years left, and you don't like what your new payment will look like, well, they will extend it back to 25 years. So your monthly payment is lower. This is not good for you. This means you pay more interest over a period of time, but the banks are doing everything possible to make sure Canadians stay in their properties. They don't want to deal with it. And although I don't necessarily agree with the tools that they are using, what I will say is that a lot of Canadians just look at that monthly payment and go, okay, if it's going to decrease my payment and I can keep my house, let's do this option. But I will be watching this very closely. Specifically, when people reach out to me to sell properties, I ask them, I'm just curious, like, why are you selling? What's the reason why? No one really has said to me, like, my mortgage renewal is coming up and I totally can't afford it. I've had some people saying, hey, my mortgage renewal is coming up and like, I don't love the look of what's going to happen here. So can we have a discussion about this? But most of them are on investment properties. Haven't seen a ton yet on primary residence, but maybe 2025 is the year that I get more of those calls. Factor number 6 is the 2 brand new mortgage rules that we had kick in at the end of 2024. The first rule being that if you are a first-time home buyer and you have less than 20% down, you can now get a 30-year amortization on your mortgage. Previously, it was only 25 years. On a $500,000 mortgage, that will bring down your monthly payments between $200 and $250. Now, you will be paying more interest over the life of that mortgage. And I've said this a few times on this channel. I'm not overly concerned about that because rarely does a first-time home buyer actually live in that property for 30 years. At least this allows more people to get into home ownership. But then you have the big one, the CMHC mortgage cap going up from $1 million to $1.5 million. How many people are going to take advantage of that? That's what I'm going to be tracking in 2025. We've all talked about like this is a debt vehicle that shouldn't have been allowed, that we're just allowing people to buy more property with less money down. You're taking on way more mortgage, way more interest. How many Canadians are actually going to take advantage of this? That will be very interesting, and that will be very clear in the CMHC and Sagen data that comes out based on their information. It's like, we'll know, are Canadians taking advantage of this, buying more expensive properties by putting less money down? Number 7 is the new construction market. In Toronto and Vancouver in 2024, not a ton were selling because the numbers didn't make sense. The development fees were high. The city was taxing them like absolute crazy and really just inflated the cost. The numbers didn't make sense. These were previously sold to investors. Even with rates coming down, still like the numbers just wouldn't make sense. So when we look forward, not this year, but maybe next year, the year after, by 2028, if we're not building anything now or selling anything now, we're not going to build anything to completion in the future. 2025, I will be watching what's happening with new construction prices. Is that a segment of the market that people are actually getting to be interested in again? Because it was pretty much dead in 2024. Number 8, tariffs. Who knows right now, as of me recording this video, if that is a threat or that is real. But we interviewed Brandon Ogmanson on our podcast channel, and he said he ran a model on just a 10% tariff on our economy here in Canada.
We have a situation where we have both variable rates and 5-year fixed rates rise because of these tariffs at the same time that our economy is getting much weaker. That's sort of the worst case scenario.
And like, it didn't look good. And I asked him, I was like, well, did you run it on 20 or 25%? He's like, no, those numbers just would have been like really scary for everybody. He's an economist, by the way. So it's like tariffs. We have to see, this is coming up really soon here. Is Trump going to actually put these in place on Canada? What's this going to do to our economy? How are we going to respond to it? That's something I think every single Canadian, whether you're into politics or not, should be keeping an eye on in some form that will come back and impact our economy and our housing market. And number 9, overall sales in Canada. How many properties are selling? The last 2 years, sales volume has been fairly low for the 10-year average. Is the confidence back in the market across this country? With lower rates and mortgage rules that allow you to buy more property with less money down, are more Canadians going to start getting into the market, which will see that sales volume go up? Those are my 9 factors I will be watching. That's my outlook for 2025. If I missed anything, if there's anything anything that you'll be watching that I didn't talk about in this video, please let me know in the comments below. My name's Tom Storey, and remember, home is where your story begins.